Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about playing bottoming patterns. Okay, many weak stocks that trend down for many months exhibit the same or very similar characteristics when they bottom, and then they rally 20 or 30%. So studying these and training your eye to see them can easily, can really boost your performance, because the first move off a low often is the big move, and it's often the easy move. Sometimes you get a 30, 40, 50% move off of a bottom, and then consolidation, and then maybe 20% more, and then consolidation, then 10% more. So if you only play the second or third move, you're going to limit your gains. If you can start to notice when a bottom is forming, that first move often is the big move. It's the easy one. So in general, there are a few things I look for, and these will be obvious when I go through some examples. And I'm pulling material from some of the other videos I've done. So first, I want some sort of capitulation. Okay, heavy volume on the way down that signifies that traders are throwing in the towel and giving up. This should then be followed by heavy volume to the upside. Okay, sometimes you don't get the capitulation day, but it's certainly nice when it happens. But you definitely want strong volume to the upside to let you know that there are big buyers that are stepping up to the table. Then, after the stock has moved up on big volume and gotten above a couple key moving averages, you want a quiet period where the stock moves sideways into those moving averages and gets support from those moving averages. Then the stock will break out and ride a moving average up. Okay, let's go through some examples, because this will be more obvious when I show you some examples. Okay, so first up here is a firm. So weak stock, trending down, it had gone down, moved sideways, trended down again, and obviously you can see here there is a huge block. As the stock was trading down, you can see there was a ton of volume to the downside. Then what happens is you get a decent upside day there, right there, where you notice the 8 moving average, which is the light blue line. You get another big volume day there, where right here where the stock closes above the 8, then the stock generally moves sideways. It's got support from the 8, resistance from the 21, the orange line's the 21, and then you see this big block of positive volume as the stock moves up to a higher high, consolidates, and then moves up, breaks out again and again on strong volume. So generally speaking, you want strong volume on the way down. Hopefully there's strong volume on the way down and a capitulation day somewhere in there. Then you want strong volume to the upside that breaks the downtrend, and hopefully gets above some moving averages. And then generally speaking, you get a move up, a move sideways into the moving averages, a breakout, then a consolidation into the moving averages, and then it continues from there. Let's go through a few more examples. So here's BNGO. Okay, in this one, we didn't have a capitulation day to the downside. We just had steady volume as the stock drop. But then we had 2 consecutive days of really strong volume right here, where the stock then gets above its 8 moving average. I'm going to trace out the 8 here. Okay, moves sideways, getting support from the moving average, and then right here we get back-to-back strong volume days as the stock continues up. Notice how it moves sideways here, gets support from the 8 moving average, and then we get continuation up. Okay, so again, with this one, we didn't get the strong volume on the way down, but we got strong volume on the way up, sideways movement, getting support from the moving average, breakout, sideways movement into moving average, and then breakout again. Here is EH. Okay, obviously really weak stock. The stock had done really well over on the left side of the chart here. This day was, news hit from some source that it might be a bogus company. The stock got crushed, and as you can see, the stock is very, very weak. Resistance from the 21. Resistance from the 21, just trending down. We didn't have a capitulation day, but we did have 2 strong volume days here that kind of broke the stock out right here. And actually, I'm going to zoom in this chart to make it easier to see. There we go. All right, so what happens is we didn't get a big down volume day. We got one there, Okay, but we did, and then we got a decent volume update to follow, but then it just continued down. So we're starting to form support here at 20. We get a big volume update here. There was some resistance here at 25, resistance there at 25, and the 21-day moving average. Stock then trades quietly, and then we get back-to-back huge volume days right here, which put the stock to a higher high on strong volume above the 8 and 21 moving average. Then notice the stock moves up, moves sideways into the 8 moving average, then it moves up, and now it's moving sideways again into the 8 moving average. So generally speaking, we want a strong volume up day for the stock to get above some key moving averages. In this case, it was right here, strong volume, goes up, moves sideways into some moving averages, moves up on strong volume, sideways into moving averages. Next one, FSR. Okay, once again on this one, we did not get the capitulation down day. Okay, but we did get 3 consecutive huge volume up days right in here that put the stock above the 8 moving average, and you can see the 8 is here. I'm tracing it out there. Okay, so you get up on strong volume, then sideways into the moving average, and then a continuation up from there. I mean, this is a great trade. If you're in at like 12, the stock goes up to 18, 19, probably gets stopped out right over here somewhere under 18. That's a fantastic trade that lasts 3 to 4 weeks. Okay, in fact, they don't come much better than this for that type of a gain. There was a potential for this to be the bottom. This is definitely playable. We have a steady downtrend. Stock goes up 2 consecutive days on huge volume, moves sideways, starting to get some support from the 8, but then it just loses it. Okay, so you got to stop in place over here. You stand aside. Maybe you make a few bucks, maybe you lose a few bucks, but pretty much break even trade. Then you stand aside and wait for the next one, and the next one went for a big move, went 80% overall. Okay, here is FUBO. All right, so what we have here, once again, we don't have the strong capitulation day to the downside, but what we do have is 2 consecutive days where we have huge upside volume. So here and here, and you can see, let's see here. So once we get these 2 up days, it gets support here from the 8, and then it gets support from the 21. We have a trend line right around here, just above 22. So the combination of, we have strong volume off the bottom, then the stock moves sideways, gets support from some moving averages. We have a overhead resistance level, so the stock kind of gets squeezed between these 2 levels, and then it pops out the top side on strong volume, and then it continues up from there. Okay, again, great trade. Even if you played the breakout here at 22, the stock goes up to 31, almost 32. But if you played it within the pattern here, you got even more. Okay, the way I would do it is when the stock does this and moves sideways, I'll buy along this moving average with a tight stop, just to get in a little bit early. I'll take a partial position there. Next example, GEVO. Let me zoom out a little bit. All right, so in this case, again, we don't have a capitulation down day, but we do have 3 consecutive up days on strong volume. Okay, so we got 1, 2, 3. That brings the stock back to life because we had, resistance here from the 21. We obviously have higher, lower highs and lower lows. Stock rallies huge on strong volume. Then it moves sideways here into the moving average, and then pops again. And then it moves sideways here into the 8 moving average, and then pops again. Okay, so great trade. Now this is a live chart, so it has come down a lot, and you should have gotten stopped out somewhere over here, but the sequence is there. Strong volume brings the stock to life, then it moves sideways on lighter volume into a moving average, pops, moves sideways on lighter volume into a moving average, and then pops. Okay, but it all starts with either a big capitulation day to the downside or some heavy volume off the low. All right, next up, HIMS, another good example. This one we did get a capitulation to the downside. So you can see 3 consecutive down days here on the way down. Then we get ramping up volume over here on the way up. Okay, stock gets above the 8. First it gets above the 8, then it gets above the 21. Let me do erase those. So stock moves up, then you can see it moves sideways into the 8 here, and then pops on strong volume, moves sideways into the 8, and then pops again. Stock is given some gains back, but that's fine. You put a stop in place, protect them, and that's a great trade. Okay, so the strong volume on the downside followed by strong volume to the upside puts the stock on your radar. And then there's definitely an entry in here somewhere around 12. I mean, if you get let me delete those. Strong volume on the way down, strong volume on the way up. Stock moves sideways into the moving average. If you're a buyer at 12, you get a move up to 15. Stop somewhere over here, probably at 14. Didn't get the whole thing, but you got 2 points. If you get really good at playing that, you're set. Okay, you only need one type of setup that you become really good at, and you just play it over and over. At first you're doing 500 shares, and you're doing 1,000, then you're doing 2,000, 5,000, 10,000. You get better, you're playing this with 10 or 20,000 shares, and 2 points is, it adds up, it's real money. Okay, next example, plug power. Okay, obviously trending down, resistance from 50 there, resistance from the 21 there, 21 there, resistance from the 21 there. So we have strong volume there, puts the stock above its 8 and then above its 21, which is right here. You can see right in here, the stock moves sideways into these moving averages and then continues up from there. Okay, since then it's given it back. But this is a nice trade. Even if you're a buyer in here, which is like 20, say you bought it like 26 or 27, you get to move up here to 34. You're still making 20%. Pretty darn good. All right, ride. Okay, we don't have a capitulation to the downside, but we definitely have ramping up volume to the upside. Boom, stock gets rejected by its 50 here. Stock comes back down, moves back up to the 50. Right in here, it gets 3 consecutive candles above the 8 and the 21 here, and then the stock pops again. Okay, let me zoom in on this chart a little bit. Okay, so just to kind of review, a resistance level formed here, and just the sequence of up big, do some backing and filling on lighter volume. This gap down here was due to earnings. Stock rallies back, pauses right here above moving averages, and then breaks out and goes. This big candle here, the stock went up, and then intraday it just fell because they had news came out. But it doesn't matter. You put a stop in place, and you get a majority of the move. All right, one more example. Here's XPEV. Okay, this one on the way down, we got super strong downside volume to tell us that not buyers, but stockholders are throwing in the towel and giving up. Then we get moderately strong volume on the way up. Stock gets above its 8. Then notice right in here we got 3 consecutive candles above the 21. And then we get a big move here as the stock breaks out and it slowly trends up above its 8 moving average. Okay, so weak stock in a downtrend, we have support here. You can draw like a descending triangle. Stock breaks down, huge volume. Most traders would say like, I can't trade this stock. Just weak stock, downtrend, lots of volume. But like actually that lots of volume tells you that that stockholders are throwing in the towel. You get lots of volume on the downside followed by lots of volume on the upside, which then gets the stock above some key moving averages. You can play that breakout for decent 10, 20, 30% moves time and time again. All right. So overall, you want evidence of a bottom with heavy downside volume followed by strong volume to the upside, or you just want strong volume to the upside where the stock gets above some key moving averages. Then you want a resting period on lighter volume, preferably into a moving average or two, and then a continuation in a trend that's going to constantly, not constantly, but it's going to touch a moving average a few times along the way before the entire move exhausts itself. All right, hope this helps, and I'll see you next time.